Hello, welcome to the Global View on this Monday. I'm Andrew Gagan. Great you can join us again here at AusBiz as we kick off the new week. Let's first start on what we saw on Friday. Global equity markets falling. Wall Street ended with modest weekly losses despite strong earnings in tech and banking stocks. That's ahead of a three-day Martin Luther King holiday weekend in the US. So markets there closed tonight. Now for the week, the S&P 500 lost 0.4%. The Nasdaq was off 2/3%. The Dow off around 1/3%. And the big US banks posting mostly solid results last week as the S&P reporting season got underway. Shares of lender M&T Bank rose on Friday after solid fourth quarter results, but actually just dipped into the red close to the close there. Hotel operators Hilton and Marriott were mixed after Barclays lifted price targets on their stock, but downgraded Hyatt, with the broker expecting growth overall in the lodging industry to pick up this year. Earnings season ramps up this week in the US with Johnson & Johnson and Intel among those companies reporting, as well as Netflix amid its plans to accelerate revenue growth by buying Warner Brothers. The streaming giant is battling Paramount for one of the most prized studios in Hollywood. Now, year over year, US estimated earnings growth for the fourth quarter is up just slightly from last week after a mixed bag of results from major banks and some other companies that kicked off the reporting period with results in from 33 of the S&P 500 companies. Earnings growth now seen at 9% for the quarter. That's according to LSEG. Well, President Trump has threatened fresh tariffs on goods from European nations that oppose his push to take control of Greenland. He's vowed to implement a wave of increasing tariffs on Denmark, Sweden, France, Germany and the Netherlands, as well as Finland, along with Britain and Norway, until the US is allowed to buy Greenland. All 8 countries are already subject to US tariffs of between 10 and 15%. And tensions between the US and Europe will be in full focus when President Trump appears at the World Economic Forum in Davos later this week. Meanwhile, investors are watching for an expected housing stimulus package from the American president, having promised what he refers to as some of the most aggressive housing reform plans in American history, which could have implications for Australian companies with US exposure to the housing industry, including the likes of James Hardie and Reliance Worldwide. Well, US bond yields and the US dollar rose in response to President Trump's implication that his economic advisor, Kevin Hassett, may not be leading candidate to head the Federal Reserve. President Trump saying, "I actually want to keep you where you are. If you want to know the truth, I would lose you. It's a serious concern to me. We'll see how it all works out." Well, the US 2-year Treasury yield rose to 3.61%. The 10-year is at 4.23. Markets pricing in no chance. The Fed funds rate will be cut at the next meeting at the end of this month, with a total of around 2 more cuts in the easing cycle. The US dollar index closed up slightly on Friday, supported by renewed tariff threats. The Aussie trading at 66.7 US cents. In commodities, oil prices rising as investors covered short positions ahead of the long weekend in the US and amid concerns about a possible US military strike against Iran. Brent settling at $64 a barrel. Gold fell more than 1% on Friday as investors took profits after recent record highs. Spot gold trading at around $4,600, just shy of that. Copper is off more than 2.5%. Iron a little change at around $107 a ton. And Bitcoin, well, that is trading at around $95,000. All right, well, let's get across what we're seeing on global markets with a focus on New Zealand. Matthew Goodson joining us from Salt Funds Management in Auckland. Matthew, welcome back. Good to catch up with you as we get this week underway. Let's first start at what we're seeing globally at the moment. I just mentioned a bit of negativity there on Friday. We've got that US holiday later tonight. But of course, it is very much about Greenland and the prospect of those tariffs on those European nations. What are the potential market implications, do you think?
Look, I think there is the taco trade. Trump always chickens out. So clearly, I think there'll be an initial modest negative reaction. And then markets will sit to wait and see what develops from there. What really matters, I think, more, unless it devolves into a complete fight, is more around the Fed and around Fed policy.
Yeah, and to that point, you've just seen that perhaps Hassett may not be the chosen one as far as President Trump. But once again, that narrative tends to change day by day, doesn't it?
Oh, indeed. You can't take anything to the bank, and it's that policy uncertainty, I think, is the issue for the market, and that the market, in an overall sense, is largely shaken off. But we're seeing some interesting changes in policy in the US. We've just seen this 200 billion of mortgage-backed security purchases financed by the Treasury. So it's a total end run around the Fed. So just how that transpires and what Fed policy will look like for the next 3 years is something to I think be very cognizant of as an investor.
Well, Matthew, let's focus on where you are. How have you opened there on this Monday?
Another typical quiet Monday morning. We're down about 30 points at the moment, but really I think trading will just pick up this afternoon. And it's been a very quiet period actually over the last few days. Normally at this time of year you get a few pre-results season reports as management gets back and updates things from the management accounts, but we haven't actually seen any of those as yet, which perhaps bodes well going into New Zealand results season in February.
Well, what's the broad outlook there in New Zealand, certainly as far as how the economy is travelling, and I guess how that's likely to inform you as an investor?
Pleasingly strong, which makes a really nice change compared to the last couple of very difficult years for us. We're finally starting to see rate cuts feed through. Our terms of trade are still very strong. We had a business confidence reading pre-Christmas from the monthly ANZ Business Outlook survey was the strongest in 30 years. Now, firms' own current conditions, what they're doing right now, are nothing like that, but they are starting to improve. We also had a very strong BNZ PMI index this morning for the month of January, which is one of the first January reads. So, look, we're unusually optimistic for this year from everything we're seeing at the moment.
Yeah, where to now for rates as far as the RBNZ is concerned? Because obviously on this side of the ditch, expectations the next move could be higher. How's it panning out on your side?
Yeah, look, we have an election at the end of the year, so if the Reserve Bank was to move, it would probably have to be, more middle of the year at the latest. Inflation is still troublingly near the top of the 1 to 3% rate band. But the sources of inflation pressure aren't widespread. Are things like electricity transmission pricing, local authority rates, and some of the one-off things that have been a real issue have really now started to change. So Trade Me data suggests rental inflation is now negative year on year. And we've also seen insurance inflation, which had been enormous, is now effectively back to zero. So the market is clearly pricing Reserve Bank tightening. It could occur, but we're hopeful that with the inflation pressures not being widespread, there is some chance they do remain on hold for a little longer than the market's currently pricing.
Now, Matthew, of course, you said it has been fairly quiet, particularly over the past few days. I mean, we are in that time of year where things are just getting going. Any particular company news that's attracted your attention?
Look, the only thing of note is quite a credible takeover bid for Raycon, which the water will have to pass under the bridge in terms of a report and what have you, but that looks to have a reasonable chance of closing would be our initial assessment. And it really does continue a theme of the last year or two where a lot of smaller to mid-sized New Zealand companies have disappeared from the bourse to takeover bids. There's certainly fixed costs have been listed, and if you're not in the index, you don't have the benefit of passive investments. So it is a little bit of a concern seeing some of those smaller companies disappear. And just hopeful that perhaps we might see a return to the odd IPO this year.
Yeah, how's that looking?
Don't know as yet. We certainly haven't been. We're not doing the work on anything that's imminent. But a couple of names I think people are looking for to re-emerge would be Trade Me and MetLifeCare, which are both very sizable businesses that were previously taken over by private equity and would likely be looking for an exit.
So, Matthew, as you look forward to how 2026 is likely to unfold from your perspective, what sort of thematics are you trading on at the moment?
Look, I think for our markets, last year was a year of a little bit of multiple expansion of New Zealand cyclical names in hopes that we'd have a better year ahead. I think this year will be the year of delivery, and perhaps even for the median New Zealand stock, at least some reasonable earnings upgrades. Obviously, a lot of the largest companies in New Zealand aren't actually that economically sensitive. We're starting to see a real thematic in global markets that we're paying attention to, which is some of the leading SaaS stocks are getting very hard hit. The likes of the Salesforce.coms, the Intuits, some of those bellwether names in the US have been very weak. And we're seeing it flip over to Australia with the Xeros, the car sales, the real estate.coms and the like. I think there's some concern as to whether they could come under threat from AI, from native AI software type businesses in the future, which are yet to be defined. And probably the other key thing we're keeping an eye on is we've had a real commodities boom. Gold and silver, have been extremely strong, speculatively so, and likewise copper. But I would note on copper that for all the confidence, there does appear to be a reasonable amount of supply, and non-commercial speculative net longs are at record levels. So pulled back a bit overnight, but it's a hot sector we'd certainly be a little wary of given the speculative positioning at present.
Matthew, great to get across your outlook. Thanks for joining us from Salt Funds Management.
Thank you. Pleasure.
All right, so that's the global picture. Let's refocus then locally. We are expecting a flat opening. As you can see, just 1 point lower. So we'll be looking for direction as we get going on this Monday. Join us as we do that in just a couple of minutes' time.